Hi there, my name is Carol King and I am the developer of Custom Homebuilders Solutions, also known as CHS, which, as the name says, is the solution for professional custom home builders for handling all of their job costing and very unique accounting requirements. CHS includes so many features that home builders came together and asked me to include based on both my accounting degree with honors and on my heavy experience in the back offices of home builders. In this quote teaser video, let's see how quickly CHS can answer your home buyers' questions about what's left to pay to complete their new home. Let's get started. So what we're going to do is quickly show you how when your customer asks you that question about how much do I have left to pay to finish my home, or you ask yourself the question, how much is outstanding for me to complete this house for my customer? We are going to look at that really quickly and show you how fast CHS gives you those answers. And to do that, you will be learning about some various contract types like fixed lump sum or cost plus markup or cost plus builder fee, and see how quickly we produce something called current contract balances. We will also briefly discuss what makes a difference in the price that you set for the customer, which is based on the profit margin that you want, and how that is different than the markup percent that you will use to mark up your costs. We will also briefly discuss your current estimated profit and how CHS is immediately calculating that for you every day, your current estimated costs, and how much is outstanding for you to pay to finish the home for your customer. But first, I'd like to tell you my very brief story. I was hired by a large custom home builder because his investor really insisted that he must hire an accountant before he would even invest. I worked for that builder for years and spent so much of my time making spreadsheets just because the generic software that I used for accounting did not give me or the builder the answers that we needed. Later, I moved to another city and I contracted with several builders to help them streamline their accounting. But after spending time teaching them all my various Excel solutions, I finally said, enough of this. I'm going to write a program for them, which was a bigger job than I thought it would be. Local builders heard about me doing this and they volunteered to become my test cases. They contributed so many ideas to the project, including all of their wish lists. So after 23 years, after working with builders across the country who have been long-time CHS subscribers now, I'm possibly slightly, maybe even a little bit, qualified to talk about all of this. So let's get started. So here's the thing. In custom home building companies or other types of construction companies, the builder can make agreements with the customers for various types of contracts. It's not just selling some widget and you put some amount in accounts receivable and that's what they're going to pay you. One thing with building homes is that price actually can be fluctuating every single day. Even though one of your contract types that you can do amongst 2 or 3 others is called a fixed lump sum, where you actually set the price. A fixed lump sum requires the builder to provide specified services and pay all costs for a stipulated fee or fixed price. So you might think, well, I'll just figure out what that fixed price is after I've gotten all my bids in and done my budgets and estimates, put that in accounts receivable and then record the payments against it, and then I'll know exactly what they need to pay out to the end of the job. The thing is that even with a fixed price, that home buyer might come along, and this top one is our contract balance report that you can get with a click of a button, by the way. The home buyer might come along and request some change orders to be done. So you've got to go ahead and in your original contract say that anything that's going to change from the original plans and our original proposal that you request, we're going to issue a change order, figure out what the costs of that are, and add a fee to it also. So you're going to have, as you can see here, an original price on a fixed one, change order prices, and then quite often, especially in these changing pricing times in lumber, etc., builders might set in their contract certain line cost items to be called an allowance, or an option some people call them. And in the contract it states that if the actual costs go over a certain amount that is set in the original proposal, the home buyer agrees to pay the amount that goes over, probably at some marked up price. So with all of that happening, what I'm saying is there's a constantly revised price from the original price, and CHS knows exactly how to figure that out and grab all the numbers from the accounting program, from the budget, from everywhere else, and show you what the current revised price is right now, today, immediately. And then it will go ahead and show less revenues already received from the customer and a contract balance. I'll show you in a couple of minutes that this report actually lists the revenues down below. But I'm going to now talk about a cost plus builder fee type of contract, and that's where the home buyer consents to pay the complete costs for materials and labor costs, in addition to a fixed negotiated fee that is independent of the costs. So this says contract type cost plus fee, and then it says something called estimated costs at completion. Now those, your costs, are changing every day. You may do an original budget or estimate, but then something happens and it's going to go over or under, and the home buyer is going to pay for that, plus a builder fee that you do negotiate, like it says. That's the original contract. You've negotiated this fee. But also if they make any change orders or changes in the original proposal and you estimated your original fee based on the original plans and budget, you probably make an agreement with them that if they do a change order, you're going to ask for fees for that change order. Up here on the fixed, that's the total of the change order prices to the customer that's being added. Here we're doing the total cost that we expect to have at the end of the job, plus that fixed builder fee, plus the part of the change orders that is fees, and come up with a revised price, and again apply the revenues received to it. Now one other type of cost plus that can happen with custom home builders is that the buyer consents to pay the complete cost for materials and labor costs in addition to a fixed percentage of the costs. So you would set the job and mark it with the percent that you agreed on in your contract, that they're going to pay this percent of the costs in addition to the costs. In CHS we'll call it a cost plus markup. Then it'll go get the estimated cost at completion today, and it can do that just at clicks of buttons, add that markup percent to it, and that's the amount of the markup being added to the estimated cost at completion, which is a currently revised price less the revenues received. I promise you it's that fast to go ahead and click a couple of buttons for all of this to happen. You'll see in a second where that estimated cost at completion comes from and how it's constantly changing. So here we are inside CHS, and I have opened the estimated cost at completion worksheet, which is constantly calculating what your estimated costs at completion are expected to be based on all sorts of things happening, like the budget, like change orders, like variance POs, total POs, actual costs coming in from your accounting, etc. I just wanted to show you that that ECC estimated cost at completion amount that's showing up on the contract balance reports for cost plus jobs is shown right here. And you can figure out how the ECC got calculated by looking at your various cost centers here. Anyway, I'd like to show you how fast you can get that contract balance report if that buyer asks you, how much is it going to cost me to get this job done? All right. Let's click this magnifying glass up here on a line that's telling you about your original price and profit difference, and another line that's showing you the current cash balance for the job. These two boxes here will only be seen by users in your company with high permission levels, by the way. So I'm going to click this magnifying glass to drill down on the contract balance due and profit variances and where the profit difference came from. The very first thing I'd like you to notice before we get into this stuff is there's a contract balance report right here. This is what we saw just a minute ago for a fixed contract when we had Campman set at a fixed contract, but I'd like you to see how it's also showing what revenues have been received for change order, down payment, interim draws. Wanted to show you how that report looks with your logo on it. So that's how fast, when they ask you that question, that you can give them a contract balance report. So what I'd like to talk about here is those three types of jobs that we went over just a minute ago, and I'd like to make a point about what you think you'd like to get as your desired profit percent and how that's different than a markup percent. that you might use to mark up the fixed contract when you're working on your budget. What I'd like to show you is that if you put in 20% here, CHS is going to say your markup percent should be 25%. And it's going to suggest a price or a builder fee if it's cost plus fee, etc. So I'm going to click this question mark button, and I'd like you to pause this video and read this if you like to understand better the difference between a profit percent and a markup percent. But first of all, I'll show you how smart CHS is about giving you some different numbers if I type in 30%. Notice that it's now suggesting this markup percent right here. But let's go back to 20 so we keep everything the same. And I also want to show you the profit and cash status report that you can get to see all kinds of things about the contract balance, your cash balances, etc., and how much that you have remaining to pay, not only what the customer has remaining to pay. If you didn't want to use a contract balance report, you could do this report and see the remaining revenues to receive, which is the same as on that contract balance report as the contract balance right now. You can see actual costs paid, actual costs remaining to pay by you right away. You can see here. And CHS tracks cash by job for you, and it is heavily dependent on the estimated cost at completion, which we'll talk about in a minute, to calculate what your revised estimated profit out to the end of the job is and a revised profit variance. So I already went over how CHS is instantly calculating the revised price so that it can give you the contract balance due, and that for fixed price it's going to tell you the price of the change orders to add to the original contract. And you can see here that we do an estimated cost and then we set a price, and it's picking up what that price is, and it'll give you the total of the price with tax and all your change orders. Then for those things marked as allowance, that you made an agreement with the customer when you gave them the proposal that they would pay for anything over. In the framing package, here's what was budgeted, here's what's currently the estimated cost of completion. We'll take a quick look at that in a second. The difference, and the builder decided to also mark up 25% on allowances that are over. So it's starting to calculate as you go. So you don't have to go figure all of that out if you're trying to figure out a contract balance due. CHS is catching all of it, bringing it in here, and saying right now, this is where your allowance adjustment stands. So let's change this real quick to cost plus markup and see how fast CHS changes it. So look at cost plus markup. What it's asking for is for you to enter a markup percent, and it's suggesting one based on your profit percent. And you'll see how it changes to current ECC plus 25% of this, which is this amount right here, and there's your revised price again. So let's go ahead and look at cost plus fee like we talked about. And we see that revised price we talked about earlier, the current ECC, which is that estimated cost of completion, because they're paying for all costs, so we just have to give them our best estimate right now, plus a builder fee that you set and typed in here when you set it, and CHS suggested one and they clicked a link to do that, plus just the part of the change orders that are fees to add to your current builder fee. That would be the difference between the estimated cost and the CO price, or the estimated profit right there. I just wanted to show you how fast you can see all of those things, and I'm going to set this back to fixed contract. Let's just take a very few minutes on this ECC. There are many videos that go into this in depth, but let's take a look down here for a second and see the framing package that we were talking about. And I'd like to show you that on this line you can see that we originally budgeted it based on the framing square feet times the unit price. So then we got a bid, and we actually issued a PO for the amount of the bid, and you can drill down and see the PO here. But when we entered our actual cost, and you can drill down and see those in detail right here, it went over. So over here we're this much over, and you saw it picking up that amount for being over. On the allowance report, notice there's an A here for allowance, but you can drill down on so many things and get clues about why it's over. For one thing, somebody went ahead and wrote a note. The estimate was for frame square feet times the unit price. Bid was received after the budget proposal was done. And probably if you want to see a bid in the list of purchase orders, they attached a copy of the bid right here, and you could take a look at it as you like. Then when the cost came in, you can see probably here this paper clip means that there's a copy of the invoice. The other thing is you can see all comments that are being made. So that gave you some good tools to drill down on various things and look at the original documents from the vendor. So now I'd like to make a really big point about how hard it would be to be posting accounts receivable for custom homes that are in progress, for various different types of contracts, for various things that happen, for the fact that costs are changing when it's a cost plus, etc. I just don't know how you would keep up with that. So I generally tell people, trust CHS and don't be trying to junk up your books with a bunch of accounts receivable that are constantly changing. When you go post accounts receivable, you usually have to then give it some offset account to post it to, some place to store those as you post them, because you usually don't want to just put it straight to sales right away when you post the big contract price, because you don't want that to show up in your income statement. That doesn't even make any sense when you haven't had costs yet. So what I'm saying, use a report that CHS has to have the same results of knowing what is owed to you, what you owe still on jobs, etc., all in one place. This report is listing the job and grouping them by types of jobs: cost plus markup, cost plus fee, fixed, etc. We saw a miniature of this report just for Campman, where it was showing that the revenues remaining to receive was this $1,121,000 something. That's the same amount you saw as the contract balance. Also, CHS is figuring out how much costs you have remaining to pay right here, so you could answer that question for yourself immediately. You can also see this as outstanding on the estimated cost at completion worksheet in one of the columns there. CHS is bringing it all together, and again, like I said, this is all very dependent on where your estimated costs at completion stand today, and as I showed you, those could be changing. One of the lines there is budgeting $150,000 for one of the cost centers, but then the vendor came along and agreed to only charge $145,000. So on the ECC, the user marked to use POs as the ECC amount, and that dropped the total ECC there by $5,000. Other things are causing it to go higher, like we saw with the framing. So what I'd like to make a point is you can open this, and it really is actually better than what you might see on some accounts receivable list. Also, when you get involved with posting accounts receivable, I think that you're probably having to put stuff in some unearned revenue account and so on and so on to keep dealing with all this stuff in accounts receivable that doesn't even make sense. I mean, you might say, oh, I could put the fixed price in and then change order prices and receivables. But what if you do have those allowance items and they're going to pay you for anything that goes over there? And that's changing like every single day as costs might go over, etc. Would you want to be running to accounts receivable and trying to stick those amounts in there, etc.? So my point is to pull back and realize how much CHS is actively doing all of these numbers for you, so that you could get a report like this that is showing you the total of your job revenues remaining to receive on open jobs. That's what this is, a list of all your open active jobs. How much money you have outstanding to pay on all your open jobs. And another biggie that CHS does is it tracks cash by job, no matter how many checking accounts you use. Then it will show you what's been posted as unpaid accounts payable that are probably due to pay pretty soon, and whether you're over or short for paying those payables over here. So you can glance at the red ones and know that you probably need to go use CHS's outstanding tools to do your billings and draw requests based on the type of job. You might be doing a percent complete, which CHS provides for a fixed. On the cost plus builder fee, there's a draw request that brings in all the costs that haven't been drawn yet, lets you uncheck some of them if you don't want to draw them yet, and then it will create a draw request billing instantly for you and let you put in what portion of the builder fee you want to take on that draw. On a cost plus markup, it'll bring in all the costs for you, let you look at them before you open the draw request, and select ones that have been undrawn to include on the draw request, but it will do it at the marked up amount, that markup percent that we said, and produce a draw request that way. So let me take just a moment to speak to the accountants that may be watching this and have become concerned about not using accounts receivable to recognize sales and cost of sales. First of all, custom home builders can be on a couple of different types of methods of accounting that the IRS recognizes. One of those is called completed contract method, and that means that they are not recognizing any sales or cost of sales until the job is complete and closed. Quite often then they are running a trial trial balance, which CHS can produce by job, by the way. And they're putting all of their job costs into a work in progress account, which NAHB calls direct construction costs, in their assets, and they're putting all of the monies received into construction liability accounts under liabilities. So what happens is that when you're ready to close the job, CHS does have a window for closing the job that will pop up the trial balance for the job, and you'll start to take direct construction cost to cost of sales, the work in progress. And these various types of accounts that are holding monies received will go over to sales at the time completed, and CHS gives you tools and asks, where do you want to send your direct construction costs? And you're probably choosing a cost of sales. And where do you want to send the monies received? And you're probably choosing sales. And so it quickly lets you make the job closing journal entry based on the simple trial balance for the job. But there's another method that people use to recognize sales and cost of sales as you go. So let CHS help you do what is called the percentage of completion accounting method to recognize earned income each month. Notice that CHS will open a screen like this and gather all your numbers, and some of these should be familiar to you for this job campment. I suggest you pause this video and study on the various columns here, and you will figure out how CHS is calculating the percent complete of the job based on the jobs to date incurred divided by the estimated cost of completion, and applying that to your currently revised price to say how much has been earned to date. And it is tracking how much prior costs were incurred prior to the beginning date we used to open this worksheet, and how much prior period revenue was earned based on that beginning date. We have already gone ahead and used the tool to create a journal entry for this prior period cost and prior period earned. At the time we did that, those were showing in current period because of the date range. And we let CHS help us create a journal entry. It will ask us where we want to send construction costs to, and we basically do a contra account called cost of sales recognized, and we do a credit to it and a debit to cost of sales. In our case, you can choose whatever accounts you like as you're doing the process. The revenues earned for that period and suggests that you use an account called Job Income Recognized and debit that account so that it'll be right underneath all your liabilities without disturbing their balances. It lets you know how much you sent to sales and how much you sent to cost of sales. And you can see the journal entry right here that was created based on the accounts that we chose to use to do the journal entry. So you will see that we have a trial balance now that has all the various accounts indicating that we are probably doing percentage of accounting entries, and that we are recognizing so much sales and cost of sales every month or whatever period you like to do that in. This is a preferred method, percentage of completion, by most consultants, and many banks might require that you use that so they can see how much you are earning each month on some income statements. Just want to briefly let you know that all of this is there without getting into too much depth on it. There are seminar videos all about percentage of completion. Hope that helps you feel better about not putting stuff into accounts receivable. CHS throughout everything continues to know what kind of job it is and how it might be changing. And so if you just get comfortable, let CHS do it for you, you're going to find that you save so much time, so many spreadsheets, and can really make that home buyer happy when they ask how much is left to pay for their house to finish. And that is just completely invaluable. And again, I'd like you to ask yourself, can you go get that answer as quickly as I just showed you every single day based on how things are changing? If you have any questions, please feel free to call us. Check out other things on our website. And don't miss the features and the seminar videos that teach you all about CHS and all of the things that it has. We just touched the tip of the iceberg here. Thank you for watching.